So let me start with you about specific investment advice, because I came across this and find it intriguing idea of idiosyncratic self-help, I think you call it. What does that tell us about a company?
So basically at Causeway, we're looking at companies on a bottom-up basis. So I'm trying to find, risk reward where we're taking a conservative view on the outlook of the company, but there are things within the control of the company where the company can increase its earnings and better the business model of the company. So an example I will use here is a company called Unilever, based in UK/Netherlands, a massive consumer company. They recently had Nelson Peltz, a shareholder activist, come in and join the board. And this is actually great news because the restructuring that they had take on themselves, is going to be accelerated by a minority shareholder advocate to push things forward. They had not been as good as pushing the innovations as in a timely manner. We believe an activist being there will really push the management to accelerate that timetable. And this has nothing to do with the economic slowdown we talked about in the previous segment, because they're doing things internally to really energize their sales and ultimately increase earnings of the company.
So, Lizanne, let me put that in somewhat different terms, which Ellen may agree with or disagree with. We say a rising tide lifts all boats. I think what she's saying is that when the tide's not going up, you have to find some boats that float a little better than other boats do. What are you looking for, Lizanne, in terms of advising people on investments right now?
Yeah, so we've really been taking more of a factor-based approach versus, say, either a sector-based approach or trying to pick your traditional style boxes of large cap, small cap, growth value. And really what the theme has been around the factors we've been emphasizing is sort of a quality wrapper. And almost hybrid factors where you look for reasonable value, but also especially in what we think, and I know Ellen agrees, we're heading into, I think, a more earnings constrained environment. So when that happens, earnings become more dear and there's more value then to companies that have that higher profitability, have that positive earnings revisions trend, while also keeping in mind the need to have strong free cash flow, healthy balance sheet with high cash, low debt. You sort of look at the macro picture, see what's lacking, and then look for companies that have that in relative terms. And you can apply factor-based analysis or factor-based screening, and Bloomberg has great data on factors across the spectrum of large cap, small cap. You can look for growth characteristics in stocks that live in the value indexes and vice versa. So I think you're less constrained when you take a factor approach than if you're just trying to make a sector call or two.
Let me put a geographic lens on this, if I could, and I'll start with you here. What about Europe? What about China? Some people or investors are saying right now China is a good place, for example, to look because they're loosening monetary policy at the same time the rest of the world is tightening it.
I think in China recently, there's been a lot of bad news priced in because of the regulatory risk and the COVID policy. And as an investor myself, looking at companies on a bottom-up basis, the fact that there is, they're in a loosening policy, plus, hopefully in the foreseeable future, the zero COVID policy goes away. I think there are companies like Macau casino operators, like Las Vegas Sands or Sands China, that could really benefit from a reopening of the country. And hence, we find those opportunities to be very attractive in the current time. And in the case of Europe, you mentioned earlier in the segment, dollar's never been stronger. And now, with Europe, what it's faced with the Ukraine situation, there's going to be a lot of fiscal spending to beef up its infrastructure. I know there's a lot of concerns about recession because energy prices are going up. But if you are able to find companies where they're going to be beneficiaries of more spending because energy infrastructure has to be beefed up, you will find good opportunities in those markets as well.
Lizanne, opportunities geographically?
Yeah, so I think there's still probably some storms that are going to have to be weathered globally with bouts of volatility, especially given what's going on in currency markets, and not to mention the war and the impact on the consumption side of economies in Europe. But I think thinking from a more secular standpoint, longer term, I think when we whenever we do come out of this, I like to think of as a dual cycle. When we're through the bear market, when we're through the recession that I think is either happening or will happen, what tends to happen when you come out of those dual cycles, especially if they're global in nature, is you tend to see a change in where leadership resides from a macro perspective. And it is our view that we're going to see more the greater benefits of diversification outside the United States. That's different than saying we think, non-US is going to handily outperform US, but there hasn't been that benefit of that global diversification. We think that's the next secular shift.
Lizanne, I can't let you go without asking about Elon Musk and Twitter here. I know you don't like to invest by sectors. Does that phenomenon tell us anything about the sector of tech, or is it, should I use the word idiosyncratic when it comes to Elon Musk?
I don't think it's a news flash that he's a bit of a quirky guy. So I think making a broader inference about the industry, at least at this point, I think is a stretch. I think it is more idiosyncratic. That's the popular word of our segments here today.
Does that sound right to you, Ellen?
Totally agree.
Okay, that's nice to end on a note of agreement here.